Alright. Party starting here soon. Trying to find one more tweet real fast, guys. Can't find this stinking tweet I'm looking for. Pause this for myself. All right, how's it going, everybody? What's going on out there? Am I still live? Hey, how's it going? I guess this one will have to work. This overlay. This is not what I was looking for. I'm just gonna keep listening to a little bit of Doge-wave over here. Alright, can you guys hear me? Hi out there. It's kind of late. Sorry, let's make this one quick. Bitcoin's kind of boring. I notice there's a lot less people in the live stream when prices are boring. Cool, thanks. Appreciate it. What I'm looking for, I can't find it in my Twitter feed, was the overlay of the whole Wyckoff model and our price. Where in the heck would that be at? Did I retweet it? Oh man, I must have to give up on this. Tweets and replies. Where the heck is it? Oh, there we go. I found it finally. Goodness gracious. And then also, hey, look at that. Got a bunch of tweets here to talk about. All right. So let's take a quick look at Bitcoin. Finding BTC to be pretty exciting, actually. Yeah, we're starting to put in a bottom pattern. You know, we hit the yearly open price. I don't know. I'm using my Coinbase chart, my main chart now. I have orders in at 32. Did they get hit yet? Not quite. I'm still waiting for 32. I figured price is going to follow this trend line down until we hit that next level, then bounce. And it's been doing that, right? It's been following this trend line that we have right on down. And it's going to find one of these levels and bounce. Let's go to a daily. I think I updated it. I have a newer chart somewhere. I did want to share my thoughts on, you know, I've explained before that I've said before that I don't use the 4-year halving cycle, and I know that probably maybe upsets some people. I want to explain that a little bit. So I consulted for sure, and it was what gave me my bullish bias, but I did this chart earlier here. It's a little bit of promotional for kind of, it's all messed up because I have to have this on a much smaller segment of my screen for streaming. But I tweeted this out, and then I've been working on it since then. Let me just go find the stinking tweet here. That's gonna be easier to do. But these are like our live trades that I've taken. These are my real live trades that I've taken since we started building our positions in Bitcoin. And you look at every one of these, while I had the 4-year halving model in mind, and I know that, you know, we had Jordan was very bullish, 18,000 by December, and that all sounded fantastic. But in every single scenario, I started building my position on these technical breakouts. We had these technical breakouts, and then we broke these moving averages, came back in to test the 120, I think, and then I bought on this technical break over here. Those are my two major entries. So this 60% entry, by the way, that's mostly my long-term hold that I'm not touching. It's this 40% entry over here that I've been trading in and out of quite a bit. So all these numbers that you see reflected until over here. Then I sold, well, cumulatively all the trading we've done, this 40% became bigger, much bigger than the 60%. So when I say I sold 80% over here, as 80% of this is all of my tradable position, but I sold 80% of my tradable position. But just look at all these, and this is not every single trade, obviously. This is the major, really the major moves that I made. There's smaller, maybe in and outs that are much smaller positions, but these are pretty much aggregations of positions that I've taken all throughout the market. And you look at all these moves, I wouldn't have made all these moves following just a 4-year halving model, right? I was following real-time price action as it played out. But the different models maybe colored my investment thesis. So I want to talk about some of these predictive models. Really, fundamentally, why I think I personally don't use predictive models. BTC 100K before the end of the year, Raphael says. Price action analysis is more accurate. Thank you. Here's the name of the game in trading. It is not a game of certainty. It's not a game of being right. It's not a game of trying to be right, especially right all the time. You want to be right sometimes, but you don't have to be right all the time. It's a game of probabilities, and it's stacking, multiple entries, multiple tries at entries, but it's playing the probabilities time and time again. And one of these days, what I'd like to do is use our bar replay capability in trading views. Walk through just like some unknown chart to me and just show you how I think about it as the price action's unfolding. That might be a really cool exercise to do. Maybe we'll try it some. I didn't really get set up for it. I just thought I'd mention it. I want to try that sometime, just show you how I think through price action, what's going on. But all these models, I know we've been talking about, this is like a different version of looking at the halving. I said before, my macro thesis was the halving event would cause a supply shock because not enough participants knew about it. And I took this in that video I did a couple days ago. And that led to, the supply shock led to us getting into the all-time high. Taking out the all-time high then led to human psychology of price discovery, and then now price discovery has been playing out. And that's where we're at now. We're in this price discovery phase with more and more people. When it enters price discovery, what happens is you get new market entrants and participants because it creates hype around the asset, especially an asset as volatile and as buzzwordy as Bitcoin. But all these models are things that might color my perspective about where things are going, and they might they're going to, as I study them, analyze them, and see what I think about them, they're going to affect my bias of directionality. But no matter what, I'm trying to trade with momentum. So I'm always trying to stay on the side of momentum. And it's a dicey game trying to pick the change in momentum. But if you can get that turn in momentum, if you can sniff it out and get it, those are some of the best entries you can get, is when you get in on the turn of momentum. And so I know Lover's Monkey's been tweeting this work a lot that he's been doing, saying that he thinks Bitcoin is going down further for a bunch of reasons, and it certainly could. But the problem is, my problem with all of this work is just trying to predict the market, and I don't ever try to predict the market. Except this is actually the most accurate prediction of the market I've ever seen in my life, and so we can follow this. We know that we're in. But the problem is, after return of Bitcoin, there's a pretty big run, and then we have the Phantom Menace. And oh my, I want to be out for the Phantom Menace. I need to put that on the chart, like over here at $200,000. When the Phantom Menace strikes, get out. It's over. Star Wars is over with the Phantom Menace. All right. Anyway, moving on. So this is great. This is great work. This is lining up super accurately. Wow. This is that Wyckoff, and we've seen. So this is where Keith posted. You boys ready to have fun? He put the low on June 22nd. Isn't that insane? He literally posted this out. Oh, it was June. Yeah, it was 22nd. Never mind. But he posted it out. 150. I don't know where he might have started with that. Maybe he had it from before. He just posted this recently. But you look at how that played out, right? This is where it started. Keith posted this one. And Jeremy put this together. I know Jeremy's been putting these overlays on there, but you can see how, I mean, just that's insane how that played out, right? And wow, and, you know, this is really cool and predictive analysis. And the odds that this is going to play out and bounce back are probably pretty good. So I'm definitely going to use this to color, you know, my thinking about where the bottom is. But at the end of the day, I'm not going to blindly follow this. I'm not going to place orders because I think that these wiggly lines here are the bars are going to match up and everything's going to work out the exact same. No. Where am I at? Why am I trying to play the bounce? Well, it's a pretty simple game, really. I'm just going to throw this couple of these on here. All right. We've lost all these moving averages, death cross. This is all very, very, very bad. But what happens, especially on a sell-off, Bitcoin is still, from a macro perspective, on chain. A lot of things are still net positive. So what I do is I color my thoughts about this whole chart with that in mind. But I also noticed, just like I was talking about, I was so worried about how far detached we were from the 120-day SMA on the way up. 50%, 43%. We were pretty detached from the 120-day SMA. And so I think on the other side, we're going to see that we're going to be fairly detached from it on the other side. But I also think we have a really good chance of returning to it on the way back up. Now, this is a moving target, obviously, and this is going to continue to move. And this is going to, the 50 is going to move, and the 200 is going to move. Looks kind of creepy with the green. But if I measure the peak sell-off, 41%, 42%. You see the symmetry here. You see, like, we had a large separation from this moving average to the upside, and we came back to it and then sliced through it pretty badly, and now we're on the downside. The same is probably going to be true. I'm going to bank on at some point we're going to curl over a lot like this curled up. I think in a compressed amount of time because I'm still bullish on this asset long term. So that's going to color my bias. But, at some point, as we curl over here, we're going to come back and test that line. If not that one, then this one, the red one, whatever. So all I'm banking on is I know there's going to be a relief rally. And, you can see it. This is a bad chart for that. Let's go back in history, 2013. This is a terrible chart for that. These charts are all horrible. I've got too much stuff on all these charts. I've said it a million times. You get this relief rally. You always get this relief rally. So what could, I guess could happen here now today. You see this like consolidation we have here looks similar. We could break down further. But a relief rally is a nice thing to catch, especially if you think like here, if you were trading back in 2017, you might have thought this was the end. This looked like the end. I remember thinking, oh yeah, Bitcoin hit that 1,000. Okay, it's coming off. When we dropped below 1,000, I was like, oh yeah. And I didn't know as much about technical analysis as I did, but I figured because we lost $1,000 that we might get rejected. But I didn't really know. But we kept talking about 1,000. 1,000's a big deal. 1,000, and it looked like we were going to lose 1,000. And so a lot of people thought the bull market was over, right here. But if you were just trying to play the relief rally, this would have been your opportunity to play the relief rally, bouncing up here maybe into the 50. The nice thing is if you were just trying to play the relief rally, look what happens. Like you get in, you look at these signals, you say, okay, oh hey, look, we retook the 120. Let me go ahead and hop back in here, or some other technical signal you're looking at. Let me hop back in here for a little bounce, and you're just trying to play it to the 50, but then it just keeps going. And so you take a little profit here, maybe you re-enter up here, and then boom, you're back in the trade for this huge breakout. So that's a fantastic entry. And so it's worth throwing some of these in your trading because, again, trading's about probabilities. It's about taking a series of trades that over time you end up winning. And so, of course, in that chart that I posted, this one, of course I had losses along the way, right? I had a lot of 1% losses. But you can see this is the aggregation of the larger moves I made. And overall, I probably was on the right side of 60% of my trades, say. I'm just going to guess. 60% of my entries probably worked out like I wanted them to. And 40% of them I had a small loss. But I had a lot of really big wins. And so that's what it's all about, is stacking a lot of entries. And so right now what we're trying to do over here on this side, what I'm trying to do is I'm trying to play that relief rally, and I hope it turns into something bigger. But the nature of this sell-off, the size of this sell-off was so large that it's bound to bounce. And see how fast we came off here, just the percentages. You start looking at, you know, a lot of other things, like a smaller moving average maybe would be more appropriate to look at. Let me go to the 20. Where's the 20 at? Yeah, there's a 20 right there, curling down. So it started to curl up, curl down. Odds are, you know, we're going to retake that line and then move to a larger moving average here pretty soon. That's kind of what I'm banking on. I'm not really, but the good thing about where we're at is that if you catch this turn, if you don't get it right, you know where you're wrong really fast. Like right now, my orders are in at 32K, right? So I've got orders here. So I see this daily. This is the daily level for the heat support, and then this is that weekly long term. I expect us to come back down to one of these levels. I've been watching it. I expect us to ride this trend line down, and I may have to enter here this weekly level. You see how that's been playing out. But so what's coloring my entry too is that those Wyckoff charts, right? I'm not going to lie and say that I'm not thinking that because those Wyckoff charts seem like they're playing out, all I'm trying to do is play this bounce, this breakout of this trend line, and I'm trying to ride the price action back down this trend line until it finds support, and I'm trying to buy at one of these support levels. I like 32,000 because I know I'm wrong pretty fast under 30, right? I like 31 a lot better, so I'm not going to, you know, deploy all my capital coming in at 32. But all these levels are great levels. But if I lose this level down here, this 30,000, I forget where I got this one from. Maybe it's that wick low. You know, we're wrong. We know pretty fast where we're wrong when we can get back out. And it's just it's a series of stacking those type of trades together. Is Wyckoff relevant? No, not really. It's just something interesting to look at. And with the 4-year halving models and everything else. So that's where I'm at. I'm just trying to play the bounce. And the safer play, honestly, is what I'm really waiting on. I'm waiting on to see if we can make it on one of these levels and bounce off of it. That's what I'm waiting on that for right now. But I'm waiting on is a signal really outside of this. See this pink trend line here? This one? A 12-hour CTM signal outside of this will signal me to get in a lot bigger for the bounce. And my price target would be that 40,000 January close initially. And hopefully all the way up to this quote-unquote most important trend line in crypto. So that's where we're at right now. Now I got out, like I said, I got out 80% above here. I will not be fully bullish. I will be super quick to take profits until we get back above outside this trend line and above the 120. And then I will change my tune a little bit, and I'll give my entries a lot more room. But right now they're on a super tight leash. They're just a bunch of small entries that are stacked to hopefully catch this reversal. And you know, we'll see if we bounce off of what I think we're going to bounce off of is this daily level right here, 31. That's why I kept saying 31.3. I do have orders starting at 32 even. So 32 even right below this to catch a wick below that if that holds. And then I don't know where my other charts are. I've got somebody thinking charts. I should probably start with the fresh chart. Let me just delete one of these. Which one is the Gemini feed? I need to be using the Coinbase feed. Bitstamp, Coinbase. All right. So that's what I want to talk about. Like, this is why I say again, you know, going back to all these entries and exits, these were all price action driven. It wasn't, you know, I'm not following a model per se. The model is definitely coloring my bias about where I think things are going. And I may be more aggressive at taking entries. Like, for example, you know, I don't know. I sold all my leverage trades up here. You know, if y'all remember that live stream, we caught that because I was on Chain Analytics that told me that. Yeah, that had absolutely nothing to do with any sort of models. That was just looking at on-chain and looking at price action and how big of a move this was. And then we re-entered down here on, like, I was probably more aggressive with my re-entries. So I think, is that break of that, like on a 4-hour? We go back down to that. Yeah, right there. So I have that line right there. So my spot purchase was on that signal right there. And then my leverage, I waited to get back into leverage until somewhere over here. Yeah, we bounced off of this. I was looking at this trend line or something like that. I think it was right over here. You get the idea. This is a beautiful leverage entry over here. We up, down, back out, found support, and then coming out of this price action over here somewhere, I took another low. This is my biggest win on Bitcoin, was this leverage entry here. I think what we were doing at the time, we were watching this. That's what it was. And when we got firmly above that, came back into it, bounced off of it, that's where I got back in. But that has nothing to do with, you know, following any sort of models. This is all just, you know, pattern trading. This is a combination of pattern trading and price action trading. So anyway, the message. I hope the message is clear, right? It's the name of the game, in my opinion. What's most successful is thinking about your trades as a series of trades. It's not being right, and every time you take an entry, you got to be right. It's playing the probabilities. The probability is when I see this type of, you know, price action and I see a breakout, the probability is that when I get this resumption signal, it's probably going to continue on for a period of time. For some, and then I can map out levels. Maybe my take profits here or whatever. And so I take a lot of these small entries and I take profits into resistance, or when, you know, price gets kind of crazy like this for a number of reasons, fib levels, fib extension levels, other indicators will tell you to take profit coming into resistances. But when you're out in price discovery, there's no, you know, you really need like fib extension levels to help you out. But it's just a series, and there were losses. I'm sure I probably tried to enter some trades over here, and I probably had a bunch of little, you know, I could probably go find a bunch of 1% losses on the chart and stack them on here. So I probably had, you know, for all these arrows that you see, I probably had 5 times the actual number of actual trades, and, you know, a good 40% of them were 1% or so losses. That's the name of the game. It's a bunch of trades. It's a whole bunch of trades over and over, and you keep doing that over and over and over again. You know, and that's how you eventually end up winning. Like this again, this play and this bounce right here, I have about a 20%. I give it about a 20% chance of working out, right? And if we get like 32, 31, 32 somewhere in here, should be the level that the price. You see these wicks here, these wick lows. This wick here tapped new supply. That was my kind of thesis. So that's the Gemini feed. Let's go to Coinbase feed again. This wick right here tapped that new supply, hit the 2021 open, and you can see it's tried to double bottom, tap that new supply. We haven't made a higher high. It's a series of lower lows, so that's concerning. But if you're trying to catch these reversals like this, you only have a small chance of working out. But it's a pretty good risk reward. That's the idea. And I'll show you an example of where I caught a reversal too. I talked about it before. I don't need to cover it again. It's ETH BTC. It actually ended up being a really big win just because of the nature of how I caught it. So I had trades on this big move here, but I took profit way too fast. But that was a big mistake. Cause this whole big ETH trade took profits too fast, and I kept having to re-enter. That wasn't so good. This one was the good one. I mean, I just caught this this kind of double bottom here. I just happened to perfectly catch that. Same exact thing I'm doing right now. Just trying to figure out, you know, when we might get a reversal and play the reversal. And that ended up being a beautiful, I took profit up here. And when you have a big trade on, you catch a big move like that, it's a pretty good win. All right, back to let's look at comments here. So models, this is why, again, I say I don't use models. I definitely use them in the perspective that I consult them, I think about them, I use it to affect my bias as to where I think price is going, my kind of macro thesis, my base case, whatever you want to call it. But then my actual trades are actionable signals, you know, price action and patterns around the market. Those models, you know, I don't care if I think the model is 100% accurate. I'm not going to take an entry unless the entry is a technical signal. All right, let's get back to the. What are we wanting to close at today? I mean, the next 24 hours, the daily already closed above this 34,000 level. Man, my chart's getting way too busy. You see, yeah, that right there, that level right there, the 33,400. This lowest closing price before these dailies over here closed lower. We closed back above it, and now we're pushing below it. So I would expect a bounce. Why do I have this level on this particular chart? This is my Gemini feed again. Can you go back to my Coinbase feed? Yeah, so my next level on my Coinbase feed is that daily right there, 31.5. And then I've got this weekly level still. I think that's still the most viable weekly level. Pretty sure. Yeah. This, what does it say? Weekly, the red level. That red level right there I think is super important still. It's still the lowest weekly. We haven't closed the weekly below that. That's going to continue to provide support. So that's what we're coming into right now, is that weekly. So sorry about the charts getting kind of busy, but we're at a really critical juncture, and so I've got to be tracking a lot of different things. So that's really what's going on with this. That's why the chart's so stinking busy, is we have a lot to track. But you look at these Heath levels. This is our daily that we're watching for. Ultimately, it's 31,600 that I think will probably be pretty close to the bottom of this move that we have coming in, or 31,135. Now again, I have entries at 20K just in case. 32K just in case we get saved at this weekly 32.3 level that we're coming into right now. I think we'll get a wick down to there, to 32. But for me, I've got entries stacked all through this zone right here. So starting at 32, a wick down below that, down all the way to 31 basically. So I'm looking at the price. Like, this is fascinating. I'm watching this. So these are all my orders stacked up right here, hoping to catch this little bounce that's coming in. And my stop loss is real tight. Well, actually, I think my actual stop loss on the orders will be below this level, this 2021 open. My mental stop loss, so we give you a real stop loss level and a mental stop loss level. Where'd my little drawing thing go? I need to make this. Oh, right here. That's why I can't find it. Yeah. So my actual technical, like what I'm going to enter in the exchange is going to be 28.6, I believe is what I picked. 28.7, something like that. Below that wick right there. But my mental stop loss is if we were to slice through here, what's going to happen is we're going to come back into this level right here, 30, and so I'm going to try to close at 30. If we lose it, and I'm hoping that we bounce back off of this and then curl over at 30 and close it out manually ahead of me closing out. So that's what I'm looking for, right? Or maybe even 31. Depends on how this plays out. But if we drop below this, something like that, I'll have to get out as tight as I can below these entries. But yeah, so you see we're bouncing right now for that line that I got. I don't expect it to hold. This should be like the last of the curl downs. If this is a proper, and you know, Wyckoff spring aside, this move right here and that very solid bounce, that tells you that the market has found new supply, and that was a really close technical move. That wick didn't get below that, so that level is super solid now. That's a really strong level. The problem over here, I think for a long time, you know, Heath and I and a bunch of others have been saying, I think we're still going lower. And the reason for me was people were saying like the level that we all wanted to see hold was that 32,400 level, that weekly level. Is that what the one we're coming into right now? I'm tired. Yeah. This exact weekly level we're talking about right now. The problem a lot of us had with using that level was this wick went too far below it. And so when this wick and then the subsequent wick took it out, that invalidated that support level in my book, especially the second one. The first one, you can maybe chalk it up to, you know, low liquidity issues on exchanges, and that shouldn't have been that low. But these especially invalidated it. So we needed to find a new support level, and we did that. That's the new support level that we tapped. We found new supply. All right, let's go to comments. We got some piled up here. 31.5. It's almost 32K. Yeah, so I mean, I'm just trying to get my entries in here. I'm not trying to be too greedy because I'm happy with. For me, I'm happy with starting to stack those orders in that whole zone. And if I don't get an order, you know, if I don't get entries, that's fine. I'm gonna wait. I'll continue to wait for the repair. These are just this is close enough to my mental stop loss, and it's especially close enough to levels I know we're gonna bounce off of there one more time and give me a chance to get out at almost break even. If I buy coming into these levels, Sorry. So what'll happen most likely is if we lose, these levels that we're talking about right now, this gave us that really solid bounce. You're going to get a weaker bounce the second time off of that, and that's going to be your chance to exit, right? So if we touch that again, that's honestly, if we don't bounce off of this zone that I kind of highlighted already, this is another way to look at this. If we don't bounce off of this zone, if we don't come in here and bounce out of it, if we continue down, then we've lost all this support. That's no longer going to be valid support anymore. And so the thing to do would be to play the inevitable bounce off of either 30 or, especially the 28 level when it bounces back before it curls back down and get out at near break even. That's another reason I take these trades coming into support levels like this, is I just know that it's going to bounce back up into it and test it as resistance, and I'm going to get the chance to exit at little to no loss. I just actioned on ADA, hoping for a hard pull and bounce here. I just actioned on ADA. You just took action? You just took a trade? Let's see what we got. Cardano. Yeah, I need to get outside this line for me. Like, I'm not interested until it gets outside this. I probably should be saying something similar about Bitcoin, but the thing about Bitcoin is we already had some levels that we've already broken them back above. You see that right there? This is also what's giving me conviction in trying to play this bounce, is this. We got outside of this. And you see the strong move when we broke that. That's what's given me conviction. And as we came back into that, we never closed any sort of meaningful time frame below that same line. That's what's also giving me conviction that we're looking for a reversal here. We're getting outside of all this. We've got enough sideways here. There's enough curling now that we should get a little bounce. But we'll see. Either this Hail Mary is going to work out and we're going to catch a nice reversal, or Bitcoin's going to continue down and break all these levels, and we'll be out with a small loss, and we'll watch in horror as it tanks to levels untold. Which would not be fun, but I'll be out. Like, if it tanks below 30,000, you better. I'm gonna be like completely on the sidelines. I'm already a lot on the sidelines. I mean, I haven't bought any alts or anything. I'm just watching Bitcoin, just trying to pick up a few reversal entries here on Bitcoin. CTM is the way. I agree. It's the whole mindset. The patience, the time frame, the different personalities that have added so much to the conversation. Obviously, Jordan had a really good system. The 8 hour, anchoring things kind of on the 8 hour time frame. The concept of trading with momentum, breakout, retest, resumption, all solid, sound principles, and have built a trading plan around those super sound principles. And then you add Heath's ability to help us to improve. In my opinion, it's no longer, these support levels are no longer subjective, and they to me have helped me. The Heath levels are just more accurate than when I was trying to do myself before, just looking at price action. These take out any subjectiveness, and I see a lot more respecting by the market of these levels. So yeah, with the whole team, it's definitely trading's going pretty well these days. And I gotta tell you, what I'm doing right now, this is not necessarily CTM. It kind of is. I mean, I'm trying to catch a breakout here. I should be, if it's truly CTM, I should be waiting for a 12-hour or an 8-hour candle, which we did kind of have an entry starting to form. No, I never had an 8-hour CTM entry, especially not a 12-hour and then a 4-hour. I should be waiting for these CTM entries. However, I'm also layering in just it kind of is CTM to lean into support, but that's in an uptrend. Like, we're in a downtrend, so this is what I'm trying to do is not CTM. Let's just also make that clear. I'm trying to buy coming into support on what I think is a reversal pattern setting up. That's ultimately what I think is going on for a couple of reasons. Namely this, we've gotten back outside of this. You can see how that price action has really, been pretty accurate. And now we're outside of this. We should be really waiting to get outside this to try to catch that reversal. But this is not CTM. This is just me taking a stab at doing my best knife falling attempt. This is all spot, of course, right? This is just spot trading. I'm not doing any leverage right now or anything. Leverage trading is way, way, way off. And I'll always maintain some dry powder here. So this is not also, I'm not going to go YOLO all in either. Heath levels are fire. The technicals look pretty good as a reversal. Yeah, I mean, it's setting up for at least a relief rally. You can call this one the relief rally up to 42. I mean, I can see that maybe that was already the relief rally, and maybe we're just going to get chopped up one more time here and have to get out and watch in horror again as this thing tanks ridiculously bad. But you know, I don't know. I have a good feeling that we're headed for at least a test of like the 40s, because we didn't ever get back there, right? You can see this just like at a very big picture. I'm trying to find, like, you know, a level. So I'm drinking a soda over here, so I'm kind of... All right. Hey, we never came back to test, like, you know, all this price action through here. We just sliced right through it. So that's kind of the level I'm, like, thinking we probably get back to. I'd have to do some work on it to see if I can accurately find something. Thank you for the like buttons. Leverage is a good way to burn your money quick. Also, buy a Lambo in a night. If you want to try to buy a Lambo in one night, leverage crypto. All right, and you don't already have the, you know, $250,000 it takes to buy one. If you're a millionaire and you want to buy one $250,000 Lambo, a really good way of doing that and barely being able to afford it is to trade leverage. You can go from $1 million to 250 real fast. All right, we should see Bitcoin throwing the bears in a pit anytime now with the return of Bitcoin. Yep, exactly. I don't know. I'm gonna play it as I see it here. I'm just trying to play this little scalp of a bounce here first, and then we'll go from there. Hopefully we can catch a reversal. It's not CTM. The true CTM method would be for us to regain momentum, which I'm a big fan of waiting for that. For sure, these moving averages, when we retake those, I'll be a lot less cagey. Obviously, right now I'm being super cautious and putting all my orders on a super tight leash. When we get back momentum back, I'll be a little bit more. I'll give my trades more room to work. Well, yeah, this level's holding for now. I'm kind of questioning if I'm going to get my touch or not here, but I really think this Heath level, this 31.6, just it seems, and then these two touches of these wicks over here, wick down to just the symmetry of that makes a lot of sense. But we'll see. All right, back to comments. Is anybody? They have. Thanks, Monique. The support is strong. 15 minutes to close. It's got to go. It's got to come up or go down. Yes, thank you, Michael. Be patient. Where's my tweet about Yoda? Yoda told me to be patient. There you go. There's young Yoda tapping his little fingers. Baby Yoda. I guess it's not as Grogu and it's not Yoda. Whatever. You get the idea. Grogu being impatient and Yoda saying patience. Yes. Let's be patient. Breathe. All right. It's really good watching you trade so I can objectively judge you. I mean, if I wanted to do it right, I'd be waiting for this stinking trend line over here, right? That's just the truth. But this is, I don't know. I have a good feeling we're in a reversal. That's all I can say about that. All right. What would be the downside level where you would have to conclude this cycle is over? I would, I want to say 28, the 28 level here would do it for me. Technically speaking, I'll tell you this. I'll be honest with you. When this happened, and when this happened up here, I kind of already thought, okay, the market's. But after thinking about it some more, here's what I'm struggling with. I'll just be totally honest with you about trying to call any sort of bull market over. I'm just struggling with. Look at my BLX chart. go look at just the nature of how like prior, price discovery, like, so yeah, this is rooted. There's the halving, and then the halving drove it into price discovery. The prior Bitcoin price discovery markets, I'll call them, were much more sharp, and the sell-offs were sharper, the recovery was sharper, so forth and so on. 2013, obviously, a much sharper early spike, and whatever. But this 2017, it just the way that this went up in a very orderly fashion with a lot of short. But at the time, I wasn't really actively trading it, just kind of watching it from afar and trying to sell my few coins. And I sold them way too early. But just watching this from afar, it just was insane. It just kept going up and up and up, and every once in a while it would have a little dip and then go up and up and up. Oh look, it dipped back below. It dipped barely below my little channel here. But the way this price action, it shot out like a cannon, way more than last cycle, and it just rolled over. What I'm having a hard time with is I think we might just end up, these moving averages are going to be all blown out because of how much distance we put between. Let me try to find a better chart for this. I need to clean up. Now this will work. Let's go to get out of the log. The distance, all this distance we put between these moving averages and price action, I think that on the other side we're going to have a good amount of distance below, and then curl. We could very well curl back up. So all that to say, if I were to say that this is like, let me actually literally throw a sine wave on here. Hold on, sine waves. What about sine wave? Do the S curve. If I look at this like this mathematical sine wave, where'd those sine waves go? Hold on. Hold, please. There we go. It's a time sine line. All right. So you can kind of see, just like if I were to look at it like a sine wave, and obviously I could probably angle this to be more accurate, but you get the concept, right? Just the way this rolled over. I can see us, going out to early August with us still being kind of on the low side because of how much time, how this kind of played out to the upside here. So to call the bull market now, what I also have a hard time with is we were up 600%. Is the downside potentially bigger than we think? I don't think so. I think if we came back to 20K, we just have a totally different paradigm. Long-winded way of saying there's a world I can see where we come all the way back to $20,000 and still somehow resume. But that would definitely be a Ben Cohen style lengthening cycle look to it for sure. So if I draw this from the launch point, say over here, to that price action, to this peak. Sorry, my music died on me. 1 second. Put on some of the music. Something like that. I can see a world where our price action looks something like this, and we still recover. It would be a very different cycle, and obviously the second peak, maybe out late this year would be something like 120,000. I could see that possibly happening, and just completely just shocking everybody and having a totally different look and feel of this whole cycle. That said, so let me add to that statement. If that happens and we break down here, right? So I'm going to try to catch a falling knife one more time over here in this little range that I talked about. So we're going to try to catch the falling knife here. If we don't get the falling, if the knife doesn't bounce nicely, we're going to be out. I'm going to hope my best. I'm going to try my best to get out as we come back to the bottom of this box and curl over. But worst case scenario, I'll be out right here. Pretty much as soon as we break that low, I'll be out. I will probably one last time try to catch the falling knife right at 20,000, right at the all-time high. And just because if we were to break down there, that's the other piece about trying to catch the falling knife here is I'm pretty sure I won't short Bitcoin just because it's almost out of principle at this point. But we're definitely going to get a bounce off of 20, right? If we actually break down here with this crazy momentum to the downside, let me draw this, you know, the most important trend line that matters type of looking trend line. I'll have to do it this way because I'm going to try to draw on top of something else. All right. By the time we get, you know what, and honestly a better trend line, if we broke down here, you could probably play this. Yeah, if we were actually to break down here, right now, you know, in the next few days, and come into 20, as soon as we break this trend line, you're going to get a bounce at least back up to 28. So that's another opportunity to try to scalp some more profits back out of the market. But if we came down here, like I said, I could see a world somehow where we kind of just do like a very weird hybrid market. So I have a really hard time answering the question of when I can call it. Like, I won't be able to call it, I'm sure, until 2022. I don't think anybody else will either. It's another advantage of being a price action, you know, focused on price action and patterns for actual trading intel and not focusing on models, because I have the luxury of not caring if models break. I just continue to play the chart. Now, I'm supposed to be shorting right now. Per my rules, by the way. When I lost this 120, my rule was that I would start shorting the market. But the problem is, my rule was when I came back up into it to test it and fail, that's where I would start shorting. And we never got a test. And we just sliced right through it. Maybe maybe the 200 is the level because of, you know, this price action. We never really got a proper test of the 200. Another reason I think we're going to bounce to one of those two levels before we fold back over to that per my predetermined rules coming into this market. That should be my shorting. So I can't. You know, that's another reason just to explain why I also won't be shorting if we do break down here below 28.8. I won't be shorting because we never got a proper test of those levels, so something's not right. And this is a, you know, a bunch of reasons why I'm expecting a bounce. It's the nature. This to me is a bit of a tell. I'll tell you all that. Like, when I saw this curl over, I went, oh yeah, some type of Wyckoff something. When I saw this not touch that right there and not quite make it to the 200, that's when I just thought something's up and it's going to bounce hard. Maybe I'm putting too much trust in my moving averages, but like the sell-off like this that slices all the way down, your bounce should be between here. All right, those are my thoughts. I mean, I just gave you a bunch of on super bull market. Lambo would have to work for years. 8 minutes left. We have a good tail. Let's see where we're at with these. Wrong chart. I'm going to put this one at the bottom because this is almost like a marketing chart that I'm working on at this point. Yeah, we got a little bounce off that weekly 32. We didn't quite touch it, did we, huh? Close to it. We're back below this trend line. I kind of expected us, honestly, to get below this trend line for a brief of. Where's that daily at again? I'm like doing some double analysis. Is this my Gemini? Dang it. Coinbase P. I'm just looking at it. Y'all, what y'all doing? Y'all see me like just think about my orders right now. I'm thinking. Like, okay, hold on. All right. I know the news is often considered ancillary to price action, but isn't there a logic in thinking that the impact of shutting down high-powered consumption miners will reduce supply, increasing price? So, Nick, your comment about high-powered miners. Do you know that the hashing power has nothing to do with how many coins are pulled out of the market a day, right? So, well, there's a hash rate adjustment. So, yeah, the blocks might be found slower. That's a valid point. I mean, the blocks are going to be added a little bit slower here as the hash rate comes down. I have to go look at what our block times are. Actually, let me look at that right now. Block times. But there's that, you know, a adjustment block time. When was the last hash rate adjustment? See here, here's our block time chart. Yeah, I can't go back that far in time, you dumb thing. Hold on. I don't want 2010. How do I do that? Oh yeah, let's go to the last like 6 months. Yeah, block times are coming up, so there's less new blocks being added. We had a little peak in block time. A little peak in block time. When was the last hash rate adjustment? So what? So let me explain this to everybody else who's. Does your 1% loss include leverage? Yeah, that's especially actually. I don't. For my spot trading, it's a little bit different. It's not. I'm not trying to trade around the same metrics per se. But yeah, it's every entries. I try to keep it a 1% loss, right? Like, it is true of spot. I try to make sure I don't have more than 1% risk on my spot entries too. But that's especially true of leverage trades. For a certainty, leverage trades never more than 1% risk. The reason I kind of hemmed and hawed about the spot is because sometimes I treat spot orders like position trades. So I have made some orders throughout the market that I consider position trades, and basically I take those coins and throw them in a cold wallet. And that's, to me, a position trade means a couple of years, right? So I bought, I guess on this chart, let me go to this chart real fast for you. And then we'll talk about block height and time and all that stuff. Yeah, this 20% right here, I put it on the chart because that's where I made a purchase. But that was actually this very first purchase of 60% over here. And it really hasn't been until this 20% purchase over here. Those are position trades for me. Those are like, I'm going to hold those, and I'll only sell those when I know we're going to blow off top for an absolute certainty, and we're going to be coming down hard quick, and I'll just, buy back pretty fast and then go throw them back in my cold wallet, right? So I only activate those cold wallets or move funds in and out of them when I'm highly convicted. And so this was basically a position trade for me over here. And this started, so actually what I did, so I took some funds that I had and bought Bitcoin here as like a long-term position trade. I actually closed out this 40% purchase here. I had played some of the miner stocks, the Bitcoin miners, Mara and Riot. We made a little bit of profit, but then I dumped them because of some research I did that I thought they'd underperform overall. And I closed that stonks trading account, and I moved those funds over, and I bought Bitcoin here, and that became my tradable. So I left that online on exchange, and that's what I was trading with, right? So this was a position trade, and this was here too. This was meant to be a position trade. It means I'm going to hold that for several years. I don't care if Bitcoin goes to $5,000 or whatever. I'm just going to go throw it in a cold wallet and leave it sitting there just because I wanted a little more Bitcoin. So for those type of trades, there's no 1% stop loss. My stop loss is 0, right? When I make a purchase to hold for a long time, and I'm only going to sell it if I'm absolutely certain we're in a mega blow off top. Which obviously all this price action does not count as a mega blow off top. It's a big move, but it wasn't an acute blow off top. All right. So like I said, him and Holland with that answer. Now the block. Let's go to blocks. Yeah, so the block time is coming up. So when block time increases, that means what's happening is all the miners around the world are looking for a magic number, right? It's basically they're like buying lottery tickets. So every time they compute a new hash, they have to combine. It didn't matter how. I won't explain. I have a video that I do the white paper breakdown. It's an older video. I should probably redo it soon. If y'all want to know more about Bitcoin and how it actually works, go watch that video. But when there's less hashing power in the network, what happens is it takes longer, in theory, in general, for the miners to find the magic, combination, the magic hash that has enough zeros to be able to mine the next block. And so when the hash rate drops precipitously like it has, until the next hash, the difficulty adjustment, then the block times are going to go up. So there are less new coins being introduced for this short period of time, which obviously reduces the effective float in the market. Now let's see. Did somebody answer the question about the when was the last? Let me just Google Bitcoin hash rate or difficulty adjustment. Difficulty adjustment. When was the last one? All right, when's our next block height? This is our difficulty adjustment. Here's our difficulty. Date to next difficulty. 7 days and 15 hours. So the last one happened. We reduced, yeah, so we've already reduced difficulty. On the 29th, we reduced difficulty. And then on the 13th. So we had a big bump up in difficulty there. These are all difficulty adjustments. So it makes it harder to find, when you make the difficulty, when the protocol makes the difficulty more difficult, it's harder for miners to find the hash they need to find. And so when mining power, what the protocol does is every time it adjusts, every couple of weeks, basically, roughly. I guess it's roughly every 2 weeks, but when the hash rate increases, the protocol adjusts the difficulty, makes it more difficult to account for the fact that there's more computational power in the network. And when the hash rate decreases, the difficulty will decrease. So since the 13th, we've had this big drop off in hash rate. Let's go look at our hash rate chart. Bitcoin hash rate. So that's true. It's a short, so there's this big precipitous drop. So the difficulty adjustment was over here on the 13th. So it didn't really adjust down very much because the average, we've had this precipitous drop. So there are less new coins coming into the market. It's a valid point. Most of the time, it doesn't impact the market right away. It takes time for that to develop because a lot of times miners, they hold on to those coins and they sell them kind of in bulk, in batches. And it's kind of unpredictable as when they sell them. But in theory, obviously there's miners all over the world. There are big mine pools and then there are smaller, one-off operations. So the net effect, all of the new coins coming into the market, some are going to hang on to them, some aren't. And some are going to sell right away. So yes, it's a valid point that there are technically slightly less coins coming into circulation right now because of this effect of this massive drawdown in hash rate. And the difficulty hasn't had a chance to catch up with that. That may start to take effect here pretty soon on the price. We can go look at some on-chain metrics to try to see if that's having an effect. So Matt M asked a question. So is there any way to do this but manage the risk better if I don't want to wait until the water is clear at 40,000? Yeah, Matt, as Michael said, your question suggests you should be patient and wait. Matt, you have to manage your risk with your position size. Yeah, so it's all about position size. And so you guys talk, if you go look at my old videos, my older videos, I talk what I do with crypto because I'm highly concentrated in just a few names. Typically, I'm not. When the market's really good, like when the alt season was really good, I had trades all over the place and all kinds of coins. I was buying all kinds of stuff. It's a bunch of small trades. But because I'm so concentrated in just a few more liquid assets, the problem with crypto trading is all these smaller names are very illiquid. It's like, in the Forex markets, you've got a bunch of pairs that are highly liquid. In cryptos, only a few pairs that are highly liquid. So since I'm so concentrated on a handful of pairs, namely stuff that's it's either a USD or BTC pair almost always, right? What I do is instead of having smaller entries, I end up taking it's a series of small entries in one instrument. So a lot of times Bitcoin's the big one that I'm playing a lot of small entries on. It's a Bitcoin and Ethereum versus US dollar. Both of those I layer my orders in. And I'll stack multiple small orders with 1% stop loss, and I don't take the next order until I move my stop loss to break even. So that way I never have, and I'll get up to 2%. Like I'll have maybe two entries at the same time, but I never go more than that. So I wait until I can move my stop loss to break even or slight profit before I take another entry. And so that's just another way I do it to try to manage my risk, but be able to over time build in bigger positions. And it's all about what they're talking about, position size. That's what matters, right? So if you're going to risk 1%, like right now, if I wanted to enter Bitcoin, I could take everything I own and enter with everything I got and some leverage if I put a stop loss right there. But the problem with that entry is I could have a humongous entry and only a 1% risk. The problem is the odds of me not getting stopped out are like next to zero, right? There's like almost no chance that this bounces off here without wicking down to that level. So, especially in crypto, because Wix, and this is a an advantage, we can try to play Wix, and that's why you have these crazy low orders in and just try to catch crazy price action. But what I do is I put my stop loss 2 support levels below. So like if I'm trying to buy in this range I'm talking about right here, I'm trying to buy, I'm trying to place a series of orders in this range. All right. So the way I see this is, that collectively is my entry and my stop loss. And a lot of people will put their stop loss below the next support level. In crypto, I don't do that. Crypto's too volatile. I go 2 support levels down. So that means I'm putting in really wide stop losses. So my position size is actually really small. Like again, if I was to put a stop loss right under here, I could have a monster huge position. But if I'm buying in here and I'm putting a stop loss way down here, those are much smaller positions to be able to manage that. And so what I have to do is I'll take a couple of orders coming in here, and as we bounce out of here, then I will move this stop up to break even to this level as I take the next entry. And then I'll have effective 1% risk on, right? So maybe this entry's stop loss is the same as that one right up here. So now I have, I'm back to 1% risk. And then as this continues to develop, if this continues to play out and I get another entry signal, then I slide all my stop losses up to break even and profit. So where I constantly am layering in until I'm happy with my overall position size, and then I let it ride. And then at some point I just stop adding positions, right? Because if you keep doing that, you're constantly going to be at a, you'll eventually get in profit. Like I'll have these so many orders in profit, it'll be almost impossible for me to have a loss. But at some point you got to quit doing that when your position size. But that's how I get the position size I'd like while keeping safe stop losses. I layer them in. Yeah, buying alts right now is both greedy and crazy. Unless you're like a really good scalping price action trader. Altcoins, like have you guys seen me talk about altcoins? I haven't talked about altcoins in over a month. There's no way am I playing this nonsense. That's insane. First of all, they're still at a mega downtrend. There's really no sign of clear reversal on any altcoin that I can see. And this is why I said it. I knew Bitcoin dominance was going to bounce. I was hopeful it was because Bitcoin broke out, but it ended up bouncing. It's starting to bounce because of a sell-off. But you better bet your bottom dollar, to use an old expression, that when Bitcoin does break out, or if it does, I shouldn't say when, because we don't know. I don't know. I don't know what's going to happen. Nobody knows what's going to happen. If Bitcoin breaks out to the upside, you better believe this is going to, because everybody's going to rotate into Bitcoin, because everybody's been scared off and been decimated, so people are just going to buy Bitcoin because they feel safer with that for now. And so that's where we're going to get this. I've been expecting this move to happen to 50, probably pretty fast, too, 57 to 61, somewhere in this range. And then in here, when we get over here, this box, then I'll look at alts again. But until then, I ain't touching alts. I mean, I take that back. I lied to you just now. I am going to buy a little Ethereum. Ethereum is the other one that, but it's such an analog to Bitcoin, and I got out like 98% of my Ethereum. I got out up here, right in this area. So I'm just also kind of really wanting to get some Ethereum back because it's always been a core position of mine. I'm lighter on Ethereum than I've been in a very long time. So for the sake of my position trade, like a long-term position, I knew this was a blow-off top. This is a perfect example. I activated all my cold wallets. I moved a ton of, except for what I absolutely am not willing to get rid of my Ethereum. I moved everything I was willing to get rid of. Cold wallets, got rid of and sold them all up here because I knew this was a blow-off top. I knew this was coming down, but I want to buy some more back here pretty soon and then go throw it on a cold wallet. But that'll be a position trade again. But there's no point, knowing a little bit about technical analysis and price action. I know there's 0 point in me adding back to my position trade just for the sake of saying I own Ethereum when it's coming down. And until it gets back over this trend line, I have no reason to buy it. So that's what I'm waiting for. I'm waiting for a touch of 1400. I will buy at 1400. I have orders just chilling there at 1416. A touch of 1416 is worth the risk to me. I will buy some and throw it back in my cold wallet. And then also a break above this level and you know, resumption outside there, I'll take a look at taking some entries. I will leave those on exchanges though for a little bit until I know the trade is kind of resuming, then take them off just in case we do come back down here to this 1400. But you know, again, difference between position trade. I will buy some Ethereum. It's going to be mostly just a position trade for now. When Bitcoin dominance, you know, gets in this area, then I'll be back to being active in alts. Yeah. Oh, thanks, Jonathan. Joe. I mean, I can't even say your name. I'm gonna call you Joe because I'm not sure exactly how you pronounce your name. Joe Nam. Jonah Nam. We'll never get that low. What will never get that low, Mark? Ethereum? Ethereum will never get to 1400? Or y'all talking about something other y'all are chatting about? Yeah, Ethereum, I mean, it already made it down to 1700. What's another 300 bucks? If you're talking about ETH will never make it to 1400, I don't know what you're smoking. I want some of it because we already got to 1700 and we're still like on a mega downtrend. So I think the odds are 70-80% we hit 1400, my opinion. All right. Jordan said no. I looked up ETC USD short anyway out of fear on the spring and was stopped out. Yeah, this is not like. Also, I'm not shorting alts. It never met my criteria for shorting. Right? Again, I guess look at these altcoins. They've just sold off so stinking fast. We haven't had a relief rally. I know the relief rally is highly probable. Not certain. Nothing certain. I don't know. We could just continue to sell off and all of crypto could go to zero for all I know. But the probability exists that we're going to have a relief rally, a sustained one over the course of a couple of weeks. And, you know, it might end up being a bull trap. I have no idea. But I know that's probably coming. And so I'm not shorting anything until I get that relief rally and I get you know, confirmation that we are then going to continue down. Then I'll close positions and short. So that's what you're supposed to do. That's what the price dictates. But yeah, all right, back to comments. Brandon, would you short something cruddy like ETC USD to hedge the Bitcoin position? No, I just close out my position. I'm not gonna. I don't believe in hedging. I hate hedging. I've always thought it's a dumb idea. Unless you're like a really big, you know, firm and you can't sell things just because the market's not liquid enough for you to move a position and you have to hedge. But hedging's like buying car insurance for a car you're not going to drive or something. You know, it's like it's just, it doesn't make sense to me. I can just use risk management. Risk management is my hedge. That's probably the better way of looking at it, right? Instead of having to play some sort of hedge, I just use risk management. Buying more ETH for sure. Doge is dog water. I did short Doge. I did as the one short I took. I did short Doge. Yeah, when we lost right here, we lost 27 cents. I shorted it for a little bit. Or was it 32 cents? I don't even know. I think I joined. It was Heath was saying he took a short, so I went and looked at the chart. I went, you know, it looks good to me. I'm gonna take it too. I kind of copycatted. It wasn't a huge. I just took a tiny position. I did short it though, because I wanted to say I shorted Doge. In all honesty, I shorted it because I wanted to say I shorted it. And took a small win. Yay! So that's the only thing I've shorted so far. Well, I was thinking for taxes. Oh, Michael, you know, yeah, I guess that's a valid point, right? I do have my core hold position that I'm not going to sell. Should I think about hedging that? It's probably. I think another way of thinking about that is my trading is my hedge against my long-term position. Sorry, man. My tradable position is my hedge, I guess, in that scenario, right? Because if my long-term hold position, if we're going to go down and be down for a long time, at some point we're going to get confirmation. We're going to get some sort of relief rally that I'm looking for, whether it happens now or maybe at a lower price level back to these levels. Man, I got what the heck, man. Sorry. But we're going to get that confirmation, and then I'll start shorting. And you know, when I start shorting, when I know it's safe to short the market, and I start shorting the market, then that's my trading position. I'm shorting while I still hold long the asset. So that's my hedge there, in my opinion. If Bitcoin up, alts don't. Yeah, if Bitcoin goes up versus the U.S. dollar, alts will follow, but they'll follow less, right? That's my, generally speaking. And sometimes alts do go down a little bit while Bitcoin goes up. It's happened. It happens. But it's really, really rare. It's when Bitcoin's on an absolute just monster tear that you'll see Bitcoin actually going up while alts are losing versus the U.S. dollar. But the big name alts, Ethereum, Cardano, Polkadot, Chainlink, they're not going to lose. Well, Chainlink does its own thing, so it sometimes very well might. But Ethereum especially, if Bitcoin's like on a rampage, Ethereum's going to follow. It's not going to lose ground. I don't, you know. But if Bitcoin's slowly making progress, you can see Ethereum trickle down while Bitcoin's trickling up. That happens too. But the big moves, they're going to follow each other in the big moves. What's your hedge to Uncle Sam? I'd rather short. My hedge to Uncle Sam is I don't, you know, I'm pretty active with tax write-offs and like business expenses. And so I have, you know, side businesses, and my wife has her own business. And so we funnel a lot of write-offs through those side businesses. And so I mean, I have plenty of write-offs, so I'm not too terribly worried about it. All right. Rakesh says, I've seen in TradingView price extends more than other tools. This either hits mental stop loss or actual stop loss, but another exchange, a trading tool, price never extended so much. You know, as far as I know, TradingView, it depends on if it's a calculated by TradingView. See this right here, calculated by TradingView. These charts tend to get very what we call wiki. They're like all of this. This is an example, right? This is a super wiki chart, and it has something to do with the way that they calculate prices. They plot it on like a time series. So if I were to illustrate it for you, here's what's happening. Like why they're so wiki. They'll take an hour, the price, you know, and they'll plot it, and so you get these very weird like. The open and close is kind of just defined, and the ranges are almost always outside of it. But the ones that are data feeds, like this is Kraken data feed, they're getting data streamed to them in real time from Kraken via an API call, and it's a real time streaming feed. And so they're taking that price feed as it's coming in live, and they're doing a much more fine grained, you know, low level plot of that data. It's not being calculated at some, you know, broader interval. It's being fed. This data is being fed. You know, you can see these 1 minute charts will move around based on the real time data coming in from the exchange. And so for the exchange fed, I don't know that I haven't experienced what you're talking about, where the trading view is different than the exchange. Maybe I need to go look closer. I don't know. That's very patriotic of you. Good for you on the taxes. No rum today? Oh, I'm on a cleanse. I'm on a 90-day cleanse. The wife and I are on like a real like strict diet. So no alcohol for 90 days. So yeah, no rum tonight. I'm probably, you know what? It's probably why I'm a lot less entertaining on these live streams. Freeway. I'm need to the crypto game. What are some do's and don'ts? I've heard buy low and hold, but what's the ideal? Don't be in the crypto game right now, says Michael. If you're new to the crypto game, first of all, start with studying Bitcoin and stay on that. That's like my first suggestion. Just stick with Bitcoin. Don't try to go find all these crazy altcoins, and don't buy Dogecoin. Please don't even start. Yeah, the next thing is, here's, let me give you some very broad models. There's a website called Look Into Bitcoin. If you want some just like very broad, where's it at? Do I not have it bookmarked? I guess not. Look at these charts over here that they have. All right. This is the simplest one to follow. This 200-week heat map. Basically, you want to buy Bitcoin when it's in these dark blue. when it's closest, the heat map is, you see this, this is the 200-week moving average, a very, very, very long-term moving average. When it's red, sell. When it's blue, buy. It's that simple. And so right now you're in a decision point. This is not a great time to get started because we don't know. Nobody knows if it's going up or down right now. I have my bias. I think it's probably slightly higher, but there's no way of knowing. It's not worth even messing with if you're not a trader. You don't know like how to do orders and all this stuff that we have to do to manage our trades. But yeah, it's pretty simple. Just look at this. I'll put it for you here. This is the simplest way I know to stay, is to buy very broad, very long term. Follow this. This will keep you pretty good. When it gets really, really dark blue, you can buy some, and just like basically take your income, whatever you have, put your money in a savings account, something, save your money, and buy Bitcoin when it's dark blue and the dollar cost average. So buy a little bit. If you don't have any crypto right now and you just want to get involved and you have some money you're okay with losing, then buy some Bitcoin. That's fine. You're fine. Just buy some Bitcoin, but just hang on. Don't buy more of it when it's like these lighter colors, and then buy less of it when it's these darker colors. Buy more of it when these red colors. Don't buy any. Sell a little bit. Maybe not even sell all of it. Just sell some of it and then buy back when it's dark blue. That's the best advice I can give you. I hope that helps. December higher or lower than today? The December price on Bitcoin? Or the December on this chart? Yeah, December was coming out of these. It was like that light blue. It was closer to 200. Okay, Joe. We got Joe over here. Let me go back up to comments here. December price was lower than today. Yeah, because we hit the open. So, sorry. See this blue line right here? This was the 2021 open price. So when price started trading January 1st, 2021, this is the price it was at. It was at 28,879. So all of December was below where we're at, right? So this was all December. This was December. And this has been 2021 all up here. So we came back down and touched exactly, for like a brief millisecond, we traded the same price as the very end of December. All right, cool, no problem. Frau 23. Last question. So CTM timing for September, October is already. Joe, I don't know. Based on my research, we should still. I still think we peak out in October. That's my opinion. It hasn't changed. I don't know what's. Trust me. I throw my hands up in the air like I don't know how this is going to play out. I got no clue, but something's probably fairly shocking is going to happen. I just don't know what or how it plays out, but I'll tell you why I think that. And if it doesn't, then we'll have a new paradigm, and we'll go analyze that new paradigm. I'm not going to be beholden to it. I was, again, I trade around price action, and I try to be as accurate as possible. And I'm not going to try to like pigeonhole myself into a specific date or anything. But this is the research I did. Here's my master log chart for Bitcoin. And I've talked about this all the time, but fundamentally, if you take from the cycle, what we call the cycle low, right? So this is Bitcoin's inception over here. 2009 is when it really started trading, in 2010. So 2010, the very first peak it made in 2011 at $30-something, and then it sold off to $2, right? If you take this low point right here, it's a very clear high, swing low. Take this swing low and you measure out from this swing low to that clear swing high over here. You get a total of 746 days. Interestingly enough, if all you do is take the swing low and swing high and find the very middle, you find the halving. So this is the very first time the miner's reward was cut in half. So it was every time you mined a Bitcoin block from 2009 to 2012, you would get, or 2008, did Hal start, when did Hal say he started running Bitcoin? When was that tweet? Anyway, you get 50 Bitcoin. Every time you mine a block, you get 50 Bitcoin. And then after this, it was 25. So this miner reward cut the reward to 25, okay? But, so that is right in between that price action, that cycle low and cycle high, it's right in between. So then you take this cycle low over here, again, do the exact same thing. The cycle low came, so the cycle high to cycle low was 403 days. And then it was from cycle low to the swing, or swing low if you want to call it that, swing low to swing high on a broader basis. That swing low to swing high was 1,073 days. All right, and right there in the middle, was the halving. What's interesting, so from the swing low to the halving was 542 days, and then from the halving to the swing high was 528 days. So something like a couple of percent shorter. It's really close to the same exact time frame from the swing low. Same thing over here. The swing low to the halving was 371 days. The halving to the swing high was 369 days. So, you know, if that, and this has been, you see this kind of very predictable metronome centered around the halving. So my thesis is that this metronome, driven by human psychology and market forces, what happens is when this supply shock happens, not enough participants in the market understand this supply shock. So it changes the supply-demand ratio, drives price into price discovery. Price discovery, I think, is, you know, where the market is really adjusting to that supply shock. And then every single one of these cycles, there's an adoption curve, right? If I were to draw, the adoption curve is, you know, looks something like this. Bitcoin is constantly there's new adoption. It's not a linear increase, though. It's actually, the adoption curve actually looks something like this. You know, whatever, right? It's a wiggly line of, I guess it's probably more like this. But you get it. There's an adoption curve going on here, which is the demand side, really. All right, so the demand is pretty consistently increasing, whereas the supply every once in a while gets decreased. So that supply shock drives the market into price discovery. Then price discovery plays out, and this is where the market orients around the supply demand. But what also happens is, because this is a brand new asset class and it's something that's not been seen since, I guess, gold would be the last time, you know, when people started really thinking about how to use gold and how to trade gold. This is the last time something like this came around. So it's prone to very big moves. And again, the supply curve, this actually drives a peak in that if I were to draw that line, the adoption curve. The adoption curve, is actually probably very close to the price action. So the price action actually also drives additional adoption in the asset, because it drives new interest and speculation, and then people understanding the asset more, and so forth and so on. So very long-winded way of saying the psychology of all this and the market dynamics of all this. I think once you enter price discovery, you have an onboarding of a lot of new participants who are understanding, digesting, and coming to understand the asset, and that's going to drive additional adoption. And so we've had the supply shock, we've had the price discovery, and now this whole time we've been way up here. This has brought a bunch of new people into the space. All this price action way up here above the prior all-time high. This is going to bring a lot of new people into the space. They're all coming to understand Bitcoin, good, bad, whatever. And so there's a lot more market business, there's a lot more adoption. Countries are now adopting it, so forth and so on. So I think it takes about, you can see the amount of time it took for the market to come to this new paradigm, and then for the market to kind of figure out what was happening. And then you finally got to an equilibrium, and then your next supply shock. So I think it's probably pretty predictable when you consider all of the forces that go into play to making these pops and then the lows happen. It seems about right to me that the market's going to kind of get this asset kind of figured out right when there's the next supply shock. So, very long-winded way of saying, I would expect the market to finish figuring out this asset, and for all these market dynamics and adoption curve and supply demand to be the equilibrium to be figured out here pretty soon. And to give us a cycle peak right on time, pretty close to on time. Now that cycle peak, because of this sell-off, if I go back to my log chart here, might end up being a lot smaller than we think. But it doesn't have to end, like, we don't have to come to a top price at this date. If it happens later, if it happens to go out to the end of the year or early next year, that's going to give us more information about the dynamics involved in this whole relationship. It'll say more about this line, this blue line right here. It'll say more about the adoption curve than it does about anything else. So that means that we had a very uneven adoption curve in this cycle, which is, I think, what's happening. I think we're having a very what this sell-off is all about is largely about China, and then obviously the green energy FUD. What happened is we hit $100 trillion, a $1 trillion market cap. At a $1 trillion market cap, this thing now has come on the radar of nation states and people, the money masters that want to protect, their position as a dominant force. And so this is them pushing back. So this is a new dynamic that hasn't happened. How long was I cut out there? I just cut out. So does that all make sense to everybody? A stop under 30K wouldn't be totally unreasonable. Yeah, absolutely. No, that would be. I would not. Interestingly enough, here's my log chart. My channel is centered on this price action through here. But I actually took quite a bit of time to analyze and look at this. And we barely peaked below here. So what's interesting is this Black Swan event. I took, I didn't count this first one. All right, guys, I'm going to wrap up here soon. Let's see what we got here. I just clipped the last explanation you gave me. A new hope for my excellent analysis. Thanks for the efforts. No problem. We're either mid-cycle or into bull market. We're waiting to find out. Yep, exactly, Michael. Nobody knows. Nobody knows. I don't know. Nobody knows. All I know is that, again, I'm stacking. The probability is that we're going to get a relief rally, and that's what I'm going to play. And then when the relief rally ends, if we come into resistance and curl over, I will be out and shorting. So that's it. That's the whole kit and caboodle. Are we going to see 27,000 on the 4-hour candles? Tarek, I have no clue. I wouldn't think so. I think this is going to be the low. I think the odds are 70% that 28,879 or whatever technical price we actually hit, 28.8 we'll call it, is going to be the low for a little bit, at least a couple weeks when we make this relief rally. Is it the low forever? That I have no clue. I would think the odds of this being the lowest price that we put in for the history of Bitcoin from now, it will never see sub 30,000. The odds of that are probably 20%. And so, again, if the odds are 20% that we never go below $30,000 ever, which I would say is probably the odds right now, then it's probably a fair play to try to pick up some scalps and play the reversal. That's what I'm doing. That's the odds. That's where I put the odds of us never touching. Why is this line on here? Oh, log. That's why. So my lines are all messed up. The odds of us never touching below 30,000 again are probably about 20%. So for me, it's worth a 20% chance that I'm going to have a really good breakout play, reversal play versus little loss on a stop loss. I hope I got all the questions here. Did anybody else have any questions I didn't catch? Let's see here. I've got a whole bunch of comments that I had to skim over. All right, I think, let me check back here some. 100%, 90% of traders lose. Josh, are you sure 100% of traders lose? 90% of traders aren't profitable at the end of the month. Let's see here. All right, here's all my trades the past year on Bitcoin. Entry, entry, trimmed, bought back, trimmed, bought back, open leverage. Now, I wanted to open leverage, by the way. If anybody's looked at this too long enough to go, why did Brandon not have leverage way back here? Well, I wanted to open leverage. My plan was to wait until I wasn't going to start leverage trading until we took out the prior all-time high in a price discovery. The problem is it took it out too fast, and I kept thinking we were going to come back down and test 1900 and resume off of it. And that's where I was looking to take my first leverage position, and we never even sniffed. You know, we got the closest we got was a couple thousand away, and then it just kept going. So my first opportunity to open leverage trades was on the sell-off in January. But yeah. That's a lot of trades, a series of a lot of trades. Here you go. That you know, open the position way over here, trimmed, bought, trimmed, bought, open leverage, closed 100% of my leverage, and you can go verify all this. I did YouTube videos on all this, and Twitter and Discord and everything else. Open leverage way over here. That was my biggest win on straight Bitcoin trading. Was this leverage trade up to this very tippy top. And I had some alts, and I closed out all of my positions at this very tip top. And we had this huge blow off top and curled down off of it. Then I took those leverage trading profits, and I may have sold some spot. I don't remember, honestly. All I remember is that I definitely bought my leverage at 47,000. I bought back all my leverage trading profits. There's a lot of profit, and all those trades. I bought more Bitcoin at 47,000. Then I reopened leverage when we broke this trend line here. I bought a little more leverage coming in here, thinking that we were headed for a breakout somewhere in here. And then I sold 100% of my leverage when we lost this level over here. I bought with those profits, leverage profits, I bought back over here. Open leverage here. These are my first losses. I opened leverage here on this breakout play. And then I had to get out at a loss. So this is a loss here. But I also, at the same time, I closed my leverage position. And I also messed up a stop loss order. So I took a pretty good hit right there. But I also sold 20% of my spot that I had been holding since way the heck over here. And then we bought back that spot here. Down here off of the touch of the 120. We touched that and bounced off the 120. I bought back the 20% of spot that I sold, plus any other profits I had left over. Opened a 2-to-1 trade, which I then closed my 2-to-1 trade when I lost the 50-day over here. And then I got 80% out of my spot that I'd been holding since over here on the left side of the screen, and all this trade profit as well. All these purchases from the trade profit. I closed all 80% of it out when we lost that 120-day SMA. I bought back 20% here with a little bit of profits, trade profits I had left over from trading alts. So I took trades when I closed all this out over here. I was aggressive in ETH, ADA, and DOT. I bought back for a long-term position over here. I trimmed 10% over here when I saw we lost this, and I'm buying back in right now. 50% of my spot positions going back into Bitcoin through a series of trades that I'm going to be taking in the next few days. So, you know, if you think that all traders lose money, and I was out 80% here. I'm trying to buy back. You see these levels? I'm trying to buy back in right above 32,000. If we get below 30,000, basically, I'll be back out for a small loss. So I've had a small loss on this failed breakout of 65,000, and I'll have had another small loss here trying to catch this falling knife. But I think you can see here that as a trader, you know at least one profitable trader. I can tell you that. All right, so it takes work though. It's not easy. It's not like this is easy to do. You know, I drew this on this chart, but when you're staring at these entries and you can't see the right side of what plays out after the fact, when it's all black, when I put my hand, when the right side of that's black, it's a lot scarier than looking at it after the fact, right? When you're taking a 1 to 5, you know, entry on, or you're buying, after this sell-off here, you're buying 10% of your Bitcoin back, and you're taking a 1 to 5% entry, not knowing exactly what's going to happen. It looks great after the fact. It's a lot harder to do in the moment. Anyway, it can be done. It takes work. It takes a system. It takes diligence, and it takes discipline. But it can be done. Oh, okay. He said, I'm not saying you can't trade, but I'm sure the majority of viewers would be absolutely wrecked if they try to trade. You know what? That's fair. If you're not, like, when I first started this channel, my audience was a core group of people in the Conquer the Market trading and investing group that were all either professional traders or were working very hard to be traders, and they were doing a lot of forex trading, so they had a lot of experience. So you make a good point that I've got a lot more viewers that are a lot more new to trading, and I guess I should be more careful with that in mind now that I've got more viewers coming in that are new to trading. If you're really new to trading, like what you see on the screen right here, dollar cost averaging in to crypto, to Bitcoin namely, I wouldn't even, like, if you're really new, just buy Bitcoin and Ethereum. When Bitcoin is dark blue like this, buy Bitcoin, 80%, maybe 20% Ethereum. When Bitcoin is red like this, sell, you know, maybe half of your Bitcoin and half of your Ethereum, and then buy it back when it's dark blue again. And just dollar cost average. When it's dark blue, dollar cost average in. When it's red, sell a little bit. That's, you know. And then you can, you know, you probably want to dollar cost average your way out too. When it turns red, sell 10%. And every time you get a red tick on this chart, sell 10%. Or something like that. Sell 20% every red tick. And then buy back on, you know, that's pretty simple to me. So this is a, like, yeah, Benjamin. So Benjamin Cowan says it'll take a while before we get to all-time highs. What are your thoughts about that? Do you think we're going to consolidate for a while? I was like, so the group that I'm in, you know, our mentor, you know, Jordan, he thought it was going to be a quick reversal, and I had to kind of disagree with him that I thought all this price action was going to cause us to have to consolidate, and it's going to take a little bit. But I'm definitely more on the Jordan side than on the Ben side about how long that's going to be. There's just so much bullish activity for Bitcoin. When you look at the macro case for Bitcoin, it's so incredibly bullish. I do think that a shorter consolidation than what Ben's talking about is probable, possible, I should say. But I didn't think it was going to bounce right back. I did think it was going to consolidate. I thought initially it might, like when we sold off, like when everybody was freaking out and it was like coming down over here, we had this conversation about, oh God, this is bad, right? And all this, I called it here that we would consolidate through June and July. That's the way I called it. I thought we would consolidate through June and July, which still very well might. We're almost at the end of June, right? And we start our relief rally over here, maybe probably get some weakness through July. Let's see, how does this actually look on the chart? Like, here's my best guess at how price action plays out. It's July. Then come back down. Then August. And then off we go. And something happens. The sentiment can change fast. I mean, I asked this question. People were like, well, do you think it can turn around that fast? Who the heck thought when it sold off to $4,000 that in like a year's time it was going to be at $65,000? Like, seriously, if I told you, if I went back to March 15th, 2020, and I said, you know what, in a year and a month or whatever, yeah, 13 months later it's going to be 65. You thought I was nuts. There's no way. There's just no way. And even over here, right? I remember this is when I was trying to build my position. I'd taken that big entry here and I was babysitting it. Like, oh man, watching it go up to $12,000. Ooh, $12,000. And then it sold off back to 10. I was like, all right, this is actually a really good buying opportunity. That's why I closed that other account and said, you know what, now I'm really going to go all in because I love the way this is setting up. It's riding the 120. It's staying above the 120. I love that. That was like my big signal. That was my like, oh my goodness, we kept riding the 120. When it broke above the 50, and we got this technical signal here, we broke this pattern, this right here, these signals, that signal right through there, that's when I got, my other part of my funds into Bitcoin. But nonetheless, who the heck thought when it broke this level that it was going to be like a brief pause at the prior all-time high? I mean, I thought it was going to be under this for like 100 days and then just rocket the heck up to 65,000. Nobody thought that. So who's thinking now that, yeah, we're going to start the recovery here, and it's going to come into this trend line, find some resistance, and just break out and go absolutely ridiculous bananas, and maybe, you get a little pause here, and a little pause there, and then it's possible. I mean, it's done crazier things, right? So, I think anybody who just blindly says, like, we can't predict the future, nobody knows what's going to happen. All I know is that the likelihood is we're going to get a relief rally and just these levels over here somewhere. and I'm going to play that relief rally, and then I'm going to watch. And if we get out here and we continue up, this is a very volatile asset. It's volatile to the upside and the downside. If we break out, it can do crazy things. It's Bitcoin. So I wouldn't put it past it. Am I calling for, you know, I would say my base case right now is this. I still think this plays out. Let me show you what I think plays out, and then I'm going to wrap up. This is a really long one. Hopefully you guys enjoyed this one. I still think we hit the top of this channel by early October, which puts us at $140,000 Bitcoin. I think this happens. The odds of it happening, 30%. But I still think it's possible. So I wouldn't say that I'm certain this is going to happen. Like you know, I think this is still very possible. And I think hitting this price level on time, something, you know, a bunch of bullish news that just drives the price absolutely bananas, is still possible. Again, I would put the odds of it at 30%. It's probably more likely that we have a hybrid that Ben has some validity to the lengthening Bitcoin cycles, and we go out to late this year, early next year. So I tried to extend that. Let me keep extending this channel. Oh, I know what I do. I grabbed the wrong point to extend it. No, what do I have to grab? I forget which point I have to grab. Anywho, just gonna. I think it's possible if I draw this out through early. So I, you know, I think if Ben's theory does have, you know, does come to fruition, I think something that looks like this, like a 280. That's right, I did it before. 288,000, which is kind of the level I'd always modeled a bunch of different ways, is March of next year. So I suppose that's also possible. That it does take us longer, we recover, and by early next year we make this peak. I don't think it's going to be 2022, 2023 peak. Now I certainly could be wrong. I don't know. I don't know. I think the data for the whole lengthening cycle thing is very incomplete. There's such low, like the only sample size we have is these are the only two halvings that we have full sample sizes for, from halving to halving, back to the other halving, right? So this is your sample size is 2. So we're going to find out a lot more. Our third sample size is going to give us so much more information that we don't have before. So trying to time the top is something I've never been too beholden to. Now I've tried to do it. I've tried to put my, I have tried to model and figure out when I think the top might come and everything else, but I don't want to be beholden to that. I'm trying to play price action as it comes, and then we'll see what happens. So that's my answer to that. I hope that answered your question, but I wouldn't put it past Bitcoin to kind of shock us all and you know, do something unexpected. Yeah, thanks guys. All right. Sorry, I should reiterate, I'm not really asking for answers since no one knows. I'm just asking you different opinions, expert traders, and see a point of view. No problem. Well guys, all right, we're gonna wrap up here. I'm gonna put me back on some Doge-wave, because I know that I don't ever get hit by the YouTube algorithms. Let's go out on a chill. Do y'all like the 80s music, or do y'all want to go out on like a chill music here? Nobody cares. Y'all gonna turn off the live stream anyway. All right, good night, everybody.